All right, let's look at the data. Forget the headlines about price swings for a second. The real story, the seismic shift in crypto, is happening behind the scenes. We're looking at 2025, where the collision between the unregulated Wild West and the rigid structure of traditional finance is pretty much complete. So today, we're breaking down the institutional data, everything from the anatomy of these multi-million-dollar scams to the regulatory frameworks that are finally bringing Wall Street on-chain. This is the new playbook.
So here's our briefing for today. We're going to start with information alpha. How to separate the real signal from all that noise. Then, we'll dissect the mechanics of a modern scam to really understand the risks. From there, we'll analyze the new global rulebook that's changing the whole game. And finally, track the institutional flows as Wall Street makes its first real moves on-chain. Let's get right into it.
We have to start here. Before you even think about a trade or an investment, the biggest challenge is this. In an industry that's basically built on hype, how do you find actual actionable intelligence?
Let's be crystal clear. In a market that moves this fast, good information isn't just helpful, it is absolutely priceless. The right insight can make all the difference. So the question is, how do you spot a credible source among all the noise, the clickbait, and the endless speculation?
Look, this isn't some secret formula. It's the institutional-grade checklist for information. These hallmarks of reliability, they're completely non-negotiable. Whether it's a crypto-native outlet or a legacy giant like Bloomberg, they all operate on these same core principles. They cite their sources, they admit when they're wrong, and there is a clear wall between news and opinion. This right here is your #1 filter for cutting through the junk.
Okay, so now let's look at the downside risk. Because when misinformation isn't just noise but a targeted weapon, well, the result is direct and devastating financial loss. This is the anatomy of a modern scam.
And this is not your typical phishing email. According to the data from California's Department of Financial Protection and Innovation, the pig butchering scam is one of the most insidious and financially destructive schemes out there. The name itself is brutal. The victim is the pig, who gets fattened up with trust and affection before being butchered for all their assets.
And this isn't a hypothetical story. This is taken directly from a consumer complaint filed with regulators, and it shows you the real-world impact. An unsolicited message from someone named Sunny led to the complete and total liquidation of a victim's 401k and their IRA.
Over $300,000. That is the amount of money one person lost in a single scam that all started with a simple message on Instagram. This is the reality behind all the warnings, and stories just like this are, tragically, all too common in the official scam tracker data.
The methodology here is systematic. It starts on a social or dating app. Trust gets built up over weeks, sometimes even months. Then comes the pivot to a fraudulent investment platform. And when the victim tries to withdraw their money, suddenly there are fake fees and taxes they have to pay, which is just a stalling tactic before the scammer disappears completely. Recognizing this pattern is your critical defense.
Now, this level of retail loss and market chaos, it inevitably triggers a response from the system. So let's analyze how global regulators are now moving to impose some real order on this asset class.
The biggest development here is MiCA, the Markets in Crypto Assets Regulation. This is the European Union's massive framework to create a single, harmonized rulebook for the entire bloc. It's meant to provide regulatory clarity for institutions and, just as important, consumer protection for retail. It's really the first comprehensive regulatory package from a major global economic power.
And this rollout has been very deliberate. It didn't just happen overnight. The rules for stablecoins kicked in around mid-2024. Then, by the end of 2024, all crypto asset service providers fell under the same rules. And then in early 2025, DORA, that's the Digital Operational Resilience Act, added another layer of rules for cybersecurity. It's a truly comprehensive framework. Now, harmonized rules do not mean a uniform strategy. The data here shows a really clear divergence. By 2025, you see Germany with 20 licenses. That signals an aggressive strategy to become the EU's dominant crypto hub. In contrast, you've got France and Austria taking a much more measured pace. That indicates a more risk-averse, kind of wait-and-see approach, so it's creating this competitive landscape within the EU itself.
And hey, this isn't just a European story. What we're seeing is a global convergence. Singapore has its own licensing regime. Hong Kong is intentionally setting a high bar to attract quality firms. And kind of overarching all of this, you have the Financial Action Task Force, or FATF, pushing for consistent anti-money laundering standards across the globe. The message is loud and clear. The era of unregulated crypto is ending.
So this new regulatory clarity, It's the green light for institutional adoption. But the key thing to watch is how they're entering the market. This isn't about replacing the old system, it's about integrating new technology into it.
This right here was a pivotal moment. In September 2025, NASDAQ, a cornerstone of the global financial system, formally proposed a rule change to trade traditional securities, like stocks, but in a tokenized form. This is Wall Street officially looking to integrate blockchain right into its core operations.
The proposed workflow is actually designed for minimal disruption. So an investor simply flags an order as tokenized. NASDAQ communicates this to the DTC, which is the central clearinghouse, and then the DTC executes the settlement on-chain. The critical insight here is that this leverages brand new technology within the existing regulated market structure.
And this is the key. NASDAQ is not trying to burn down the old system. Their filing literally states that today's system works extraordinarily well. This isn't a revolution to replace banks and exchanges. No, it's an evolution, aiming to leverage blockchain for more efficiency, but squarely within the system that already exists. So, we've journeyed from the chaos of scams and bad information to the structured world of global regulation and the first real steps of institutional integration. What does all this mean for the future? Is this a truly new chapter for digital assets?
So when you boil it all down, the 2025 crypto landscape is really defined by four key things. The demand for verified information is absolutely paramount. 2. Sophisticated scams remain a very persistent threat. But 3. Comprehensive regulation is no longer a theory. It's a market reality. And that is the catalyst for number 4, the first wave of careful institutional integration.
So that leaves us with the really big question. The guardrails are being built, the big money is starting to flow in. But does that mean crypto is truly ready to move from being a niche, speculative asset class into the mainstream portfolios of everyday investors? Well, that's the answer that 2025 is just beginning to write.
Just a quick reminder, this analysis is strictly for educational purposes, and it's based on data that changes very rapidly. This is not financial advice, so please always perform your own due diligence. We are tracking these flows in real time. While you analyze the next move, check out the tools in the description. Sign up for Public to get $20 in free assets, check Webull for that BTC promo, or look into NVDA on Moomoo. All the links are down below. Like and subscribe for more deep dive analysis. Stay disciplined, stay liquid.